Aloha, everyone. Thank you for joining me for Java. It's Thursday morning, and we're all together here on November 16th, 2023. So, thank you kindly for joining me. We had quite the stock market rally yesterday. Basically, what happened was the inflation numbers coming in as we expected, but now they're pricing that the Federal Reserve will not hike for the next two cycles. So basically, market is pricing in the rate cuts, more easy money. We still don't have the MMRI working quite yet. We should have that soon, but with the relative strength of the dollar dropping as well as the 10-year yield gave a great boost to stocks. However, this easing is positive for gold as they're losing faith in the US dollar. I've got more on that in a bit. We're going to have mostly markets today, and a couple of things toward the end. So, right now, we've got a positive sentiment in the markets. They're feeling bolstered, continuing towards what they call the Santa Claus rally. Futures are showing a bit mixed. It does appear that there might be a mild correction incoming in the short term, very short term. In the longer term, there's still a tremendous amount of instability in these debt markets, so we're watching this. We'll go over a little more of that in a bit. We are expecting jobless claims in a bit here prior to the market open, and if those jobless claims are higher, means stocks will go higher. People losing their jobs is what the Federal Reserve is kind of pushing towards because it will bring down inflation. We are still in an election cycle and still keeping on the calendar the corporate buyback window closing on the 8th. So, moving forward to our calendar this morning, as we are getting the initial jobless claims, we've got a couple of Fed presidents speaking today. None other than Master, who is stepping down this summer. But more Friday, tomorrow morning, will be about housing starts and the building permits. So, position our positions in the stocks or trading for that. So, with the rates dropping, the mortgage rates have been the lowest they've been in quite some time, and that's spurring a bit of applications for mortgages, refinance, as well as purchases. So that's good for that area, the real estate market. And I hope you got your coffee early, or at least from a local shop, because it appears Starbucks are striking in multiple areas. So we'll see what happens with that. There's quite a bit in the labor going on. So, as I said, the reason the market has gone green, it had quite the rally yesterday because they do think that Fed rates are coming. And as this says, investors could be let down. I think it's still a very real possibility they will continue to cut because they're facing some other headwinds on the other side, and the inflation may force them. So, with the price of oil and a couple of other things in the trade sector. So we've got the APEC meeting going on with China president coming to meet the US president. And the relations there are not very good. Along with this, we've got the president of China saying basically that US and China can only be either adversaries or partners. We had the US president was calling him a dictator, and the Chinese president returning was saying that the US president is irresponsible. A little bit difficult of an argument there. Anyway, we'll see what happens. They must continue forward for now. Can't afford to have war directly. So, with all this going on, we've got JP Morgan favoring commodities over bonds. So, we've been talking about this for a while, the movement of money and how things are going to happen between all of these currency wars and everything in the background favoring commodities. Now we've got JP Morgan coming out and saying it formally. That being said, oil is on a pullback currently. So they're saying that the storage numbers in the US is quite good. I don't know that I would go that far. There have been purchases and basically taking oil from Iran that's passing through other things going on back into production. So we'll see what happens. As it is right now, oil has a bit more of a correction to go, but in the long run, it's going to go back up. We're going to have higher oil prices, which will lead to higher inflation in the long run. So, short of a larger depression, that's what I'm seeing. We have Reuters reporting also, aside from commodities, investment funds are now stocking up on US farmland. So it is a safe haven bet. We also know that Bill Gates has been purchasing large tracts of United States farmland in particular. And so you might want to look at what they're doing and why. That's always kind of the direction that I take. Try to figure out why they're doing this. So we've got the European Union banks saying they may face a major hit if they need to sell bonds. Basically, they would sell their bonds to get cash. So this is just another facet showing the reality that they are short having physical currency. And that's Christine Lagarde. So anyway, another aspect of this. On the other hand, showing what the central bankers are doing with all of this talking about rate cuts. And I realize this is Hungary and they're smaller, and the Bank of England talking about how rates may need to stay higher for longer. So I think markets might be in for a shock if they overprice these Fed cuts. In the meantime, we've got UBS saying the US economy could have, this quote throws me. So he's saying we could have a few negative quarters next year. Well, last time I knew, quarters means we only have 4 in the year, and a few is more than 2. So that would mean a minimum of 3 out of 4, and that's not very good. Maybe I'm missing something here. Anyway, we've got Citibank is also starting mass layoffs. They're basically under new management, and they are restructuring. And if you look into the jobs that are being taken out, it's middle and higher management. So the lower end, there is some lower end layoffs going on, but they're controlling costs. And this is what we were speaking about before. Generally, that middle management will be cut, and this is how they will readjust wages. So they're giving these the lower end wages, and then they will be putting them into the higher positions and cutting labor that way. And that's not just Citibank, that's across the board. So yeah, this is UBS in another section quoting, saying that they're not heading for another global financial crisis about the recession. We will have a recession in some form or another. It's just a question of how long it will last and how deep it will cut. Generally, it has to go to a certain amount. So you have it less for longer, or just basically more painful but a shorter period of time. So this is something it's outside of the markets directly, but I wanted to bring this up because I think it's very important, and we will be seeing more of this moving forward. So this article, I don't necessarily agree with it on the other side, so I'm just reporting what they're saying. Small group of farms in California using more water than entire cities, and it's mostly going to a single crop. So this is a very slanted article, and it's basically talking about hay. Where the hay goes, well, feeding livestock. So they're targeting beef, meat, and protein again is basically where this is going at. So talking about it's mainly to feed livestock, and then they go on to say the incentive to keep growing water-thirsty hay to support greenhouse gas emitting livestock will continue if changes aren't made to the cost of water. So I always watch, they hide these key gems in here. If they increase the cost of water, this is a different form of control. And we were talking about resource control before this. So this is another target. They will target controlling not just the cost, but also, so this is going to follow through with higher cost of beef and meat, highly inflationary. And then water rights have been a large issue in the West for a long time. If you're out West, you know what I'm talking about. But anyway, we'll keep an eye on this. I've got one last story I really wanted to bring up. So Paxos is going to issue US dollar stablecoin for trade. This is in Singapore. So Singapore is putting out cryptocurrency legislation and allowing these trades. This is from PayPal, basically, released their crypto, their token a couple of months ago. but now it's got initial approval over in Singapore. So this is kind of a start of the larger trade and exchanges that will be allowed there. It's going to have large implications for the space moving forward. One other thing I did want to bring up as far as travel, because I think mobility is also, we don't necessarily look at it as a right, but the freedom of movement is important. And what's going on is TSA, Transportation Security, is under NHS for the United States. Nevada, the Homeland Security, basically, and they're stepping up their surveillance and control. They've increased their terrorist watch list program to expand to J6, January 6th. So the key here is they're expanding it to citizens of the United States. So just something to keep an eye on. With that, I wish you all a green trading day, just a wonderful day in general. As always, my friends, stay free.